But the other stock from the same space that actually came out with its set of numbers was Amber. And that stock is up closer around 10%. Just pull up that stock. That's up closer around 10%. The street likes those numbers. It's up 13% as we speak. CreditAccess Grameen will be joined by the management in the next 20-25 minutes or so. Well, those numbers look quite good. The stock up closer around 4.5%. Talbros, a smaller stock, we don't talk about it very often, but that stock as well has opened up with a gain of close around 4.5%. Or I think the quarterly numbers that they reported were quite good. On the flip side, you had Reddington. Well, that stock is opened with a cut of around 3%. The dividend payout was the lone positive out there. Otherwise, those numbers were disappointing. The margins compressed as well. Goa Carbon, well, that's another smaller stock that we don't talk about very often. One of the most commoditized businesses. It had a couple of good quarters. Today, in fact, it's giving back quite a bit of that, 8%, because of the weaker than expected numbers. And Oberoi Realty as well. Remember the previous quarter, it looked quite good, but there were a lot of one-offs out there. And the street seems to have taken note of that. So for starters, that's down close to around 3.5%. The Nifty moves lower. I think it could correct a little bit more before you get in. 18,150 is the important mark on the downside. So let's see whether or not we see some buy on dips working out yet again. Prashant.
Okay, well, 18,267 for now is where we are at. We'll find out if what we saw yesterday was just some sort of a nervous shakeout and the market resumes the uptrend. Though at the margin, for what it's worth, the handoff from Wall Street last night was not very good, but at least in the last 1 month or so, that has not really mattered what the US is doing. The momentum here is really picked up, and we are one of the first large markets to come back to very close to all-time high levels. So that's the Nifty for you. Lots of stocks moving, and we'll come back to a few of them in a bit from now. Mihir Vora is with us. He's Director and Chief Investment Officer at Max Life Insurance. He's joining us to take some questions. Mihir, good to have you with us here. Thank you very much for your time. Are we, first of all, just a quick view on earnings, which you're watching closely. How are they tracking? Will they lead to a little more optimism on the upcycle, which everybody is betting on? Or will it puncture that narrative, that optimism? What's your sense?
It's been a decent earnings season, not very great, but if you look at the two big sectors, banks have done very well. Financials and banks results were quite good. No issues about NPAs, margins, and doesn't look like there'll be any issues, at least for the next few quarters, for banks and financials. So that was one bright spot. IT, of course, disappointed. We did see some downgrades, and that cycle, I think, is likely to continue. And on the consumption segment, which is discretionary as well as FMCG, we did see some signs of margin pressures easing out. So that's one hope that we have, that in the next few quarters, the margin pressures for consumption stocks and consumption durables as well as non-durables should ease off, and hopefully, if we have a good monsoon and the rural piece picks up, then we should see a decent performance by the consumption pack. So I think mixed bag, but going in with a bit of optimism for the next few quarters.
Okay, by the way, this market, it may look flat, but beneath the surface, there's plenty of action taking place, and the market is in a mood to reward good earnings. Amber Enterprises, we were talking about that, 13% higher now on that stock, big mover in the broader markets. CreditAccess Grameen, the street definitely likes the margin expansion, so 7% higher now, 8% almost on CreditAccess. And a couple of other names, something like a Max Health is up 2.5%. Cyient, which reported good numbers a while ago, is up about 3.5%. Dixon Tech is up about 3%. So lots of stocks coming back in the broader markets. How are you feeling about the market now, Mihir? Is this a market you think that has more legs to the rally? Is there enough to sustain on the upside?
I would say for the larger caps, there is still some upside left in terms of valuation comfort, because we are almost flat versus for the last 12 months, which means that while earnings have grown, the markets are still at the same level. So valuations relatively are much more comfortable than we were 12 to 15 months ago. That much I would say for the large caps. In the mid-cap space, while it's not good to generalize, but in general, I think there is a bit of valuation froth that has built up. So yes, there is some valuation upside in the larger caps, while the mid-caps may be a bit more limited.
Hi, Mir. Good morning. Mir, how do you approach the two-wheeler space? Bajaj Auto has come back in style. Now, hopefully, domestic demand remains more or less constant, and exports, which were down and out a few months ago, the management has suddenly started talking about a revival out there. How do you approach the two-wheeler space?
So two-wheelers, I think you're right. The domestic market has still got to pick up, and there is some hope on the exports front. But in general, in automobiles, we have seen that product launches, whether it's in cars or four-wheeler, cars or two-wheelers, product launches make a big difference. So even though the segment might not grow as well as we would like it to, there are cases where individual products or individual segments do well. So I think companies really need to innovate and do the right thing. EV is another strategy that companies need to use, and we have seen that two-wheelers companies have been losing market share to the EV segment, and there are some plays in the EV segment. So those are some of the themes that I would play in the two-wheeler space.
Okay. So since we're talking about two-wheelers, EVs, let's talk about the lenders as well, because many of them have done exceptionally well, whether it's something like a Chola or, even talking about what we have in the here and the now. I mean, CreditAccess Grameen, for example, a slightly different space, but very strong growth. Disbursements have grown almost 25%. How are you looking at this entire piece, and what would be your pick of the pack here?
See, for NBFCs as well as for banks, the biggest driver for credit growth in the last many years has been retail, and that trend continues. What had happened in the last, I would say 12 months or 15 months is that because of the tightening cycle, NBFCs had become a bit more, cautious or reluctant to grow fast because of the funding cost going up, while banks continue to do very well. But now with funding costs, no longer an issue in the sense that we are probably past the peak of the tightening cycle by the RBI. Even NBFCs should see the worst of funding issues past them. So I think it's a matter of time, and we are seeing NBFCs also getting more aggressive as things ease off on the liquidity front.
We were talking about, Nigel was pointing out Amber, which was up 12-13% of the back of results. Keynes is another one, which is up 13%. That's in the same space, electronics manufacturer, which is at about 11.30 with a 13 to 13.5% move. That's not Keynes, Kaynes. That is, doing very, very well. So Dixon, of course, is the old granddaddy of the space. It's up 3%. So that's a space to keep an eye out on. Varun Beverages, by the way, is another one. That's the one, Keynes Tech. Varun Beverages is the top volume-led gainer today with a 2.5% gain. 16.14, 16.15 is where that is. Sonata Software saw a very large move on the back of strong earnings. We had the management with us yesterday. That's up 1.5%. Triveni Turbines, huge performer. That's up another 4%, 400. So lots of new stocks into the mix. Vesuvius India was limit up, by the way, on the back of earnings. That is up another 5% this morning, 2,400. Cyient is coming up with a 3% pop. Suryodaya is up about 5%. Coromandel is up 3%. Saxsoft is up 4%. So once again, I mean, even though the Nifty is not doing very much, the broader market, is really throwing up lots and lots of ideas and lots of action, really. Mihir, you did say that maybe time to be a little more cautious there when you go down the market cap curve. Is there a very generalized kind of a view, or are you seeing exuberance in certain pockets one needs to be careful about, or is there a broad valuation call?
I think, of course, in mid caps and small caps, you really have to look at it stock by stock. So it's not very nice to make a very general call on that category. But if I look at the numbers and if I look at the proportion of stocks which I believe are overvalued, it is higher in the mid cap segment, especially in the next 50 to 100 kind of level. Because I think if you look at the markets over the last many months, they have been driven mostly by domestic flows. And I think a lot of money is coming into the mid and small cap funds, or at least the diversified flexi cap funds. So to that extent, I think a lot of money has been chasing through the mutual fund route, through the PMS or AIF routes in the mid and small caps, which is probably leading to a valuation, cap.
All right, Mihir, before we let you go, we have got some insurance data that came out yesterday. And LIC continues to falter out there. So what's your view on the insurance space? Most of them have come off considerably because of the changes we saw in the budget. And a lot of selling is what we've seen as well. Is it time to allocate some money to any of them?
Yeah, obviously my view would be biased. But, Overall, I would say that we should look at the longer picture, and financial leisure savings is a reality. Money will flow into investment products, whether it's through the mutual fund route or the insurance routes. In insurance, we of course have the bigger upside or the bigger potential, which is protection. India continues to be a highly underprotected market. So all those macro factors are there. We have seen setbacks in the past. A few years ago, a similar tax breaks were taken away for the ULIP segment. But beyond a few months, we did not see any blip as an industry on the sales of ULIP products. So I think broadly we have to consider that the industry is self-sustaining and is a growth industry even without tax offs. And if that's our belief, then I think these short-term issues should not matter. And stocks have corrected, valuations have become more attractive.
Okay, all right, Mihir, we'll let you go on that note. Thanks a lot for joining in and have a good day. That's the word coming in on the market, which, by the way, is so very quiet. Actually, it's a good thing. Gives us some time to, talk about individual numbers. By the way, we were talking about lenders. A lot of these lenders have been doing really well. Lenders / NBFCs. So CreditAccess, of course, is the stock of the moment. But don't lose sight of something like a Chola Finance. It's at a fresh 52-week high today. And the stock has gained 50% this year already. It's come back in a big way, Chola Finance, up about 1.5% today and 50% for the year. Chola Investment, okay, yeah, Chola Investment is 40% gain over there. But it's been a strong performance from Max Healthcare in Q4. They reported their highest ever revenues and profits in Q4. The bed occupancies improved while the EBITDA per bed also expanded. So we have Abhay Soi, who's the chairman and managing director at Max, who joins in now to give us a view on how things are shaping up as we begin a brand new fiscal. Abhay, thanks a lot for joining in. Appreciate your thoughts. I wanted to start by asking you about the occupancies, because this quarter the occupancy level was in excess of 77%, which is very good. But can you tell us what has the contribution been from, say, medical tourism, from surgical revenue, and what kind of occupancy levels do you think you can maintain in FY24?
So, Sonia, we've had a 77% occupancy, but we've also opened 100 new beds. So that's about a 3% plus increase in capacity. So it's obviously 77% on a higher sort of this thing. Going forward, we are in about 6 months, we are expecting another 300 beds to come on stream. We've also said there's another 60 to 70 beds that we're going to be unlocking internally. So that's about, let's say, about 350 beds, which is another 10% capacity. So I don't think we have a capacity issue over here. And, we've also, some of our beds are suboptimally utilized because of institutional business, and we'll be distilling those beds. So I think due to combination of these things, we don't have an issue as far as occupancy is concerned, at least. And then the margin, you always find that, previously in certain quarters, we've also operated at about 80-81% sustainably. We've done that through COVID and some after COVID as well. So I think you can always ilk up a few percentage points on occupancy. And as you're aware, in 2025, we have another 1,000 beds coming through. And this is all largely brownfield expansion, right, to elevate business need and requirement of capacity.
So you're saying you have 300 beds coming up in the next 6 months. And, I'm just trying to understand what would this mean in terms of an average revenue per occupied bed that has already expanded to about 70,000 rupees. Is there scope to improve it further?
I answer this question every quarter because, this is yet again highest quarter. But yes, let me sort of guide you to the fact that at least 30% of our beds are catering to institutional business, which is less than 50% of our regular business ARPOBs. And as we distill, you'll see the ARPOB numbers move up. Secondly, even at the EBITDA level, the big advantage is that you have about 85% of this incremental revenue come through to EBITDA. So you will have an increase in EBITDA per bed because of which as well. And most, I think importantly, what we've been encouraged about with is the sort of brownfield that we're doing. As you're aware, the 2,900 beds that we are building, we're in the process of constructing them as we speak. 80% of that or 85% of that is brownfield. We just opened our first brownfield in March, on the 1st of March, Sonia, at a Shalimar Bagh hospital. It broke even within the first month. Not only that, the EBITDA margin for those from those incremental 100 beds has been 35% compared to 28% for the rest of the organization. So you know the huge operating leverage that you get from brownfields is phenomenal.
Hi, good morning, Prashant here. So for FY24, so EBITDA ex COVID-19 vaccination numbers for FY23 grew 25%. What's your estimate for FY24?
The vaccination numbers?
The EBITDA, operating profit number for FY24. What kind of growth can you do in FY24?
So I don't give guidance. I stay away from giving guidance as far as EBITDA margins or EBITDA, or revenue for that matter.
Would it be in this, would it be 20% plus? Without getting into specifics, would you maintain what you've done in 23?
Well, we hope to maintain what we've done in 23, but, I'll tell you something, a very important aspect I want to sort of bring to bear on behalf of the industry, on the behalf of Max Healthcare. I know you haven't asked me that question, but 3 years back, when we listed the company in 2020, one of the biggest critiques of the hospital sector was that it's not free cash flow positive. And, you need to keep sort of reinvesting in this business and so on and so forth. This year, at the end of this year at Max Healthcare, we've had a 1,637 crore EBITDA, but 80% of that has translated to free cash flow. We had free cash flows of 1,281 crores. Versus a 1,630 crore sort of EBITDA number, which encouraged us to give our first maiden dividend. So look, I think, you're seeing a decadal sort of opportunity within the healthcare sector. I'm not only saying on behalf of Max, I think the entire sort of sector for that matter.
Then congratulations, Abhay. The only thing is it's the nature of the business, right? Capacity, you operate at a certain capacity, the capacity becomes full, you have to add beds, buy hospitals, and then you see another big step up in overall numbers, and then you operate at that level, and then there's another phase. I guess that's the reason why, that question on free cash flows comes up. But congratulations once again on that particular point. Abhay, I just want to quickly get your thoughts on the international patient business. You've always said that that is improving, even though the patient flow from an important market for you like Afghanistan has been, next to nothing. I think you're already at pre-COVID levels. Can you give us some guidance how that will look in 24? Will that continue to improve?
No, absolutely. I think, look, we are a little beyond pre-COVID levels, but I think we are nowhere where the opportunity set is. And I've sort of keep saying this is not an opportunity for incremental growth, but you can have exponential growth because the sort of comparative advantage that we have, really no other nation in the world does. I think even the government is getting supportive about it. So, perhaps not in the immediate short run. And you'll see a great sort of growth in the short run as well. But I think you're going to see phenomenal in the medium run. With Heal in India and all the sort of support that we're getting from the government, it's really going to pay off in spades.
Sure. You have a large pile of cash on the books, over 700 crores. What is the plan in terms of utilization of that cash? Are you looking to do any fresh capex, anything else that you have planned?
So, interestingly, our 2,900 crores of capex that we are doing, that a cost of 4,500 crores. Now, this over the next 3 to 4 years, this equates to 50% of our free cash flows over the next 4 years. So that leaves us our entire free cash flows. It leaves us our ability to leverage. We won't shy away from leveraging up to 2.5 times debt to EBITDA. So that gives us a war chest of $500 million or more without sort of, breaching any of those covenants that we've created for ourselves. So yes, I think it's entirely for inorganic growth. And, we want to do it selectively. We want to do it keeping fiscal discipline in mind. We have an ROCE of 36% cash on cash across the portfolio. Whatever we do, we need to be sort of mindful of that. And, we look at about a 20% plus ROC visibility in 4 years. So that's the way we sort of look at, that's the fiscal discipline we'd like to maintain.
Abhay, just one last question on care hospitals. I understand that the matter is in court, but anything you'd want to tell viewers, investors? That could, of course, I mean, that it was being seen as a big one if it were to go through, but what are your thoughts there now?
Look, we are suing TPG for specific performance, and the matter is sub judice, as you're sort of aware. So I don't want to expand upon it. But perhaps in a few weeks, when it's sort of the dust settles, I can talk about it.
All right, fair enough. Abhay, thank you very much. Always a pleasure speaking with you. Appreciate you joining in with that perspective. So that's Max Healthcare with conversation around FY23 numbers, and of course a fair bit about FY24 and how things may look. Stocks perked up actually from the time that we started the conversation. It's up about 1.6%. But CreditAccess is the next company we'll be speaking with. That reported a solid, steady set of numbers. We were talking about how that is, occasionally perceived as the HDFC of the MFI business, and they've delivered. Stocks up about 6-7%. We have Uday Kumar Hebar, Managing Director and CEO of the company, join us on the other side of this quick break.
Welcome back. This is Corporate Radar, and let's talk about one of the big movers this morning, CreditAccess Grameen. Well, the stock has seen a big move. The street clearly likes the guidance that they've given, as well as the past quarter. To understand, though, what's the way ahead, we're joined by Mr. Hebar, the Managing Director, as well as the Chief Executive Officer of the company. Good morning, Mr. Hebar. Congratulations on a solid showing. The street has given its verdict. They like these numbers. Now, give us a couple of details. You're guiding for a loan growth of close to around 24 to around 25% odd. Break that up for us. How much of it will be in higher ticket size? How much that will be because of volumes? And also your AUM, now you have crossed the 21,000 crore mark. What's the target, say, for the next 3 to around 4 years odd? Where does this number head?
Thank you. Good morning, Nigel. Pleasure to be here. So we guided about 24 to 25% annual growth, which will be fueled by at least 14-15% customer growth, as well as maybe about 8 to 10%. I can't say ticket size growth, it's a GLP growth because it's more of a vintage clients getting the adequate funding who have been with us for a long time, more than 3 years. We have more than 53% of customers. So therefore, there will be a natural increase in the lending to those kind of customers who have been having a stable business and stable cash flow. So therefore, the difference is 8 to 10% GLP increase because of the vintage clients and about 14-15% customer growth. And on the long-term basis, our view is that sector also should go between 20-25% for the next 3-4 years, and we should be, aiming to follow the similar trend actually. So not able to give the exact number today, definitely. 1 year is the visibility we will give, but our aim is to stay with the typical growth in the mix of microfinance and non-microfinance together. Maybe beyond this year, microfinance may taper down to maybe 23, 22, 21%, and the non-microfinance will catch up in that space. So overall, still maybe around the same 20-25%. That is what our view, our aim is to grow that way.
Mr. Heber, you're saying loan growth 25% and customer number growth will be about 15% in that. That's the that's the target. And the rest will be ticket size.
It's more of a increase in the GLP per customer.
Where is it now, and where do you see that? How do you see that progressing over a period, say 24 and beyond? I mean, what's the broad thinking?
What we saw that, customer GLP will keep increasing considering the improved business environment because of inflation. We always saw 9 to 10% increase of GLP over years. If you see past 10 years, you could see that kind of 10% increase of GLP across sectors, not only Grameen. So that trend will continue. So with the strong support of new customer growth, I think it's achievable. And as I said, beyond 24 also, our view is that the portfolio per customer will definitely increase by 10 to 12%, for Grameen as well as for others also.
Okay, so you're saying in FY24, 14 to 15% customer growth is what you're looking at, and for the sector as a whole, the next 3 to 4 years is looking very strong with the 20 to 25% growth. Got that. Mr. Heber, good morning. I'll come back to numbers in a bit, but I also wanted to ask you, Karnataka is an important state for a company like yours. Does this election campaigning affect collections? I'm asking because, in the past, a lot of political parties have offered loan waivers, subsidies, and that has affected collections. Has this time been the same?
Actually, no. I disagree with the election impact in the collections. We never faced that. There will be some impact on the growth during that 15 days or 1 month because people have to follow the code of conduct. You cannot gather too many people. So that's kind of, you cannot carry cash too much. There's some code of conduct everybody has to follow. So that extent we can agree. But we never faced the collection deficiency. Collections already over, or collection as it is very well, no problem at all. We continue the same trend. And an election as an issue, it happens every year, one or other state. So therefore, it's a part of our business. So we don't see any significant impact because of election. We never saw that.
Okay, so you're saying that elections have never affected the collection, maybe a little bit on the growth front, but collections are not impacted. Got that.
It's only for that 15 days, 1 month time, that's all.
For that, okay, got that. I also want to understand from you, is there any change in the percentage of lending that you do to the group lending segment? Because, group lending in general is a bit more safer. So have you changed your contribution to group lending over the next 1 to 2 years? What would it look like?
Actually, our entire business is group lending on. Now that we might start, we already piloted the non-group lending, particularly the customers who are scaling up. They have been long vintage with us. They have a stable cash flow, stable business. For them, we are actually moving into an individual business loan, which is in pilot. This year, we did, I think, about 150-200 crores. Our sense that will start growing and contributing more going forward. Over the next 4 or 5 years, we can see about 10 to 12% of the business would come from non-microfinance segment, which is individual business loan, unsecured, secured, mortgage, two-wheeler, all those things. But it is a nascent stage today. There will be good traction, going to be good traction in the 23, 24, and then beyond, it will grow definitely.
All right, Mr. Heber, you have given a nice elaborate guidance as well. So most of what we want to know, you've already given on your presentation with regard to the loan growth. NIMs will be around 12.2% or cost to income. But besides the operational performance, another factor that I would like to know is the promoter entity holds close to around 73% stake, right? Around 73.5% odd. Now, I think in the past you have hinted at that number coming down. So will there be some promoter stake sale in this year? If yes, could you tell us what is the total quantum that could happen in this year and what is the total quantum that could happen?
we said that it will be medium term. We are not said within 1 year or right now, but it may happen between this year or next year, because there is no necessity of any funding for the promoter entity, because they are sitting with good cash flow, and it's also the intention is to enhance the good investor base in the Grameen rather than the need of money in the promoters. Probably even if it is there, it won't be in the market actually. So maybe it will be dealt individually, or very small quantity for maybe 4, 5, 6 good long-term investors we would target to enhance the investor base. But we are not having any plan right now. But in this year or next year we are planning that. But that won't be more than 6%. That won't be more than 5%.
More than 5,
more than
around
6%.
Around 5 to 6% is what you're looking. Around 5% in the next 24 months or so, this should get done, right?
Maybe that could be, because we keep watching, because there is no other way of increasing investment, because we are not planning any capital enhancement, because our internal accrual is quite good. For next 2 years, we are not looking for any secondary availability. So the only way is to enhance investor base is this. Probably you would look at 24 to 36 months.
Have you all received any kind of demand? Because numbers are looking good, guidance is good.
We not started working on it, because
not yet started. But 5 to 6% is what we could work with. Maybe it happens this year.
Not more than that.
Okay. For this year, particularly for FY24, what kind of disbursal growth are we looking at? I mean, you spoke about the customer growth of around 14 to 15%. But in terms of disbursals, what can you aim for in both FY24 and 25?
So disbursement is about 17-18%. I think about close to 20-23%. That is what disbursement we did last year. I think it will go similar fashion, because in our case the disbursement is our loans are little longer term in terms of microfinance also. Almost 29% of our book is 3 years book. Therefore, we don't need to churn the disbursement so far. Therefore, it is little lesser. So last year we disbursed about 17,000 crores. Probably next year it will be about 22,000 crores, not more than that.
All right, Mr. Heba, just a couple of more questions. You're already done with your con call, but I think you have an analyst call. So we're just trying to give the analyst some bit of base. One of the questions that could come up is, any plans to convert into a small finance bank?
So we already had the analyst call. So, but
no, you have an analyst meet, right? You have an analyst meet, that's true.
Yeah, we have been answering this question over the last 7 years. This plan on this was available to us even 7-8 years back, but we always consciously stayed away from this aspiration, because both are good business. Banking also good business, microfinance also good business. There's enough potential in the rural to still grow well with this kind of model. We always believe this model is very good model, particularly working in the rural with the low cost operation. You can demonstrate quite a good quality, and I think at least for next half decade, we don't have any plan to diverse our mindset beyond this business. So it's always attraction. But our view is we should stay focused in microfinance.
Good to clear the air, right, sir?
Okay, so you're staying away from that banking aspiration, at least for now. Got that. But can you just leave us with some highlights on what the growth could look like geographically? Where is the expansion going to come in from for CreditAccess Grameen? I mean, you spoke about a disbursement growth of 20 to 23%, but geography-wise, what are you looking at?
Yeah, our continuously we keep expanding district by district. Our contiguous district approach is the best approach we have been following. So already we are in 14 states, and then many of these are expanding by the same districts. There are many districts are yet to cover in the states like Gujarat, Rajasthan, UP, Bihar, Jharkhand. We have more districts to cover. Typically, we also step out. I mean, once that is done, we would get into Himachal and Haryana, and then know that the Tamil Nadu, Andhra also, that the air about the issue which was in the court have been resolved. Probably we will review that also. So I think we have enough space to grow. And then currently also, last year we acquired 1.2 million customers. 46% of customers we acquired from the non-core geography, particularly in the new geography. So the growth will continue to be from the new geography. So we believe that our diversification will continue to go beyond our 4 states. Similarly, district-wise also, we have hardly 3 districts which is more than 2% of our portfolio. So all the districts are less than 1% of our portfolio. That's also another way we look at the distribution of the geographical expansion.
Okay, all right. Mr. Ebar, thank you very much. It's always a pleasure, sir, speaking with you. And, the market verdict is a thumbs up. The stock's doing very well. The other one is, I was mentioning Keynes earlier. It's up 17% now. Numbers came yesterday, and the numbers, at least prima facie, look very good. Looking at full year earnings for Keynes, the stock will come up. It's, operating profits are up 80%. Margins are up almost 200 basis points. And there's a 130% increase in profit after tax. So overall seems to be a good set. Amber, of course, is still up about 10-11% as things stand right now. Okay, on to our next company. It was a steady quarter for Paras Defence. Revenues and profits saw a growth while EBITDA declined and margins also contracted. Amit Mahajan is Director, Technical and R&D at the company. He's joining us now to take some questions. Mr. Mahajan, good to have you with us here. Thank you very much. The fourth quarter was a steady one. However, there was some impact which was seen on margins. Could you tell us what put pressure on margins? And last time you were on the channel, you mentioned an order book of 550 odd crores. Could you tell us what did you end the financial year FY23 at in terms of order book?
So firstly, good morning and thank you for having me over. See, there has been some dip in EBITDA, but that's within the tolerance, I would call. Some impact maybe because of certain projects. We are a project-oriented company, and certain projects might have a higher raw material content, and that can have some effect on EBITDA. But this is also very, very marginal if you look at it. If you look at the PAT figures, they are still improving. So I would like to say that there's been a steady growth, and there has been steady retention of all the growth figures that we've been maintaining.
Okay, all right. Hi, Amit. Good morning. Give us a growth number then. For FY24, for FY23, you've grown by around 20%. I think in the start of the year, you were aspiring for a bigger number, but maybe some kind of delays and the likes. Now, what kind of a number can you guide for to grow in FY24? And also, what kind of a rough margin? So I want 3 numbers: revenue growth, margin outlook, and current order book.
So I will start with the current order book. Current order book is in excess of 550. We still retain that with a funnel much, much higher, more than 2x, which also we are retaining. The order book will start building up in the next quarter or so. The revenue, we should grow much higher than what we grew this year. For the coming year, I would like to mention about 40 to 50% at least is the growth that we're looking at.
Margin? And margin?
Margins we would retain or slightly better.
Okay, slightly better margins. And you said 40 to 50% growth in their revenues is what you're looking at, is it, for FY24?
That's what we're aiming.
Okay.
We have order book to support that.
Sure, sure. Yes, you do. Of course, you have an order book of 550 crores. I get that. Currently drones constitute less than 20% of your order book. But I remember you mentioning last time that there is the increased traction in this space. Can you tell us what is the order book like? What's the order visibility? And how are the margins in this segment?
Drone, the good part is we started revenues in the drone segment. And another good part is we got certification for our agri drone. So this has already kick-started some of the business which was in store for us. This should look at a good revenue in this particular financial year. Margins, it all depends. It's a little competitive space, but still because one, our technology is very, very superior than most of the agri drones that we have. And the second is we are making it everything in-house. So making it very, very cost effective and still retaining very good numbers as compared to Paras Defense. So Paras Aerospace will execute far more better margins than Paras Defense also.
So could that be one of the reasons why the blended margins could suffer? I mean, in the near term, 23% is what you've clocked in this time. I think, about 26% actually in Q4. Given that you're saying that, you're looking to sell drones at a competitive price, perhaps penetrate the market further, could that affect your blended margins?
It would affect blended margins the day Paras Aerospace revenues are substantial, right? Currently, even if they go to 100 crores, it will still blend in and the blending effect will be negligible. At the same time, Paras Defense is doing well and their margins are improving. So it somewhere, nullifies. And there won't be negative impact for sure on the blended margins.
Okay, all right. Out of this total number that you're giving us, exports will be how much, Amit?
Exports, we would be looking at about anything between 10 to 20%.
10 to 20% of the revenues?
Yes.
Okay, all right. And drones in the past, I think you had said by 2025, they'll constitute around 25% of the total revenues.
Yes.
Is that the number you'll stick to?
We are still bullish on that. Yes.
Okay. Is it a possibility that Paras Defense maintains, a 40% sales growth over the next 3 to 4 years? I'm asking because, that is perhaps the expectation that the industry has, given the kind of tailwinds that you're dealing with. And is it also not just, 40% sales growth, but also on the margin front, maybe about 27, 28%? Is that a reasonable estimate as we move along over the next 3 to 4 years?
I do not want to talk about 3 to 4 years because that's a very, very long horizon. But the next couple of years are looking very, very bright. We have that much commitment on our hands, and that commitment is growing as we talk. So next couple of years, you can expect very, very good growth for companies like Paras Defense.
Okay, all the best. Thanks a lot for joining in. That is Paras Defense and the way forward for the business. They're getting a lot of order traction from, spaces like drones, and their order book has also been growing quite a bit. The market is very quiet, so let's just take a breather from equities and talk about commodities now. Manisha Gupta is joining in. Manisha, hi, welcome back. What's the one commodity you're looking at today?
Sonia, thank you. I'm looking at copper prices because we've seen further declines into this one. We started the week on a positive note, but it hasn't stayed like that. The weak Chinese data, the US economic numbers, all coming in on the weaker side, clearly seems to be weighing onto the prices. The China industrial production to begin with at 5.6% is way lesser than the estimate of 10.9% that the street was waiting for. And then property investment, new home sales, retail numbers, industry orders, factory activity, all of those numbers have seen a decline as well on a quarter-on-quarter basis and much lower than what the street was anticipating. So at best, this is not an even recovery coming in from China. If you look at the Chinese copper imports itself, that fell by 12.5% in the month of April. That has led the copper prices to nearly 5-month lows on the LME right now. Also, when you look at the overall imports into China into the first 4 months of 2023, that has seen a decline by 16% also. Apart from that, the China exports have been on the stronger side, but much of that is not going into the consuming countries or companies. That is actually landing into LME warehouses, and LME physical loadout, that is what the markets have marked out for in a decline, or rather for delivery, is only at a 225 tons, which is not great at all. So that tells you that on-ground demand clearly seems to be slipping here. I want to talk about the prices also because we started the month of January quite strong. $9,550 a ton is what we started the year with, and we are currently trading at $8,140. So a very sharp decline from the highs of this year and from where we started this year as well. It's not just the physical markets, but the funds also seem to be now turning bearish. So when you look at CME, the short positions have gained up by 68% to 58,000 contracts right now. So this is the much higher level that we have seen in last 3 weeks itself. If you look at the long positions, they have come down to 41,987. So when you look at the overall net shorts, that is up by nearly 16,000. This is what we've done on copper on LME as well. So in April, the longs were at 25,000. Right now, they're just at 4,000. So we have seen a lot of sell coming in by the funds as well. What the markets are also watching out for is the global visible inventories. So the Shanghai inventories are at a 1-year lows. LME inventories at the lowest since 2005. So the only thing that will give support to market is some stimulus coming in from China, or if the Chinese demand comes back on a stronger side as well. Until then, the markets do believe that there could be more pressure in many of these metals.
Okay, all right. Thanks a lot for that, Manisha. Well, for the time being, though, we'll slip into a short break. But on the other side, Lata will be in conversation with Mr. Sanjeev Chadda, the Managing Director and Chief Executive Officer at Bank of Baroda. Stay with us.